Okay, we're now recording. All right, so welcome everybody. Happy New Year. Welcome to the stock market review for our yummy subscribers and guests. And of course, today is January 3rd, 2024. All right, how's everybody doing? Good? Good New Year? Everybody recovered? Pretty much so, hopefully so. All right, excellent. All right, so let me just go through the administrational items. And of course, first thing we land on are the risks involved in trading. We want you to be aware that there are risks in trading the markets. It's possible to lose some or all your money trading or doing any other type of financial endeavor for that purposes. But you need to be aware of the risks, and you also need to fund your account with risk capital. Also know how to do, of course, risk calculations on each trade that you make. And I've written a couple books on that. Most of you have that by now. But also to run by anything we talk about here, any of my analysis, any stock opportunities that I may present, run those by your financial advisor or whoever manages your money to be sure they're suitable for you. And then also finally, past performance doesn't guarantee future performance, because we deal in a realm of probability. So even if we have a system that gives us an edge in the markets, we're not going to win all the time. So you definitely have to have a good risk control plan in process. If you need help with that, I've got 2 books on money management that you can get that will actually help you solve that issue of risk control. And it won't eliminate it, but it helps you to protect yourself as best as possible. I've got my new book, The Art of Trading, coming out in 2024. So that's I'm pretty excited about that. I think that's going to be the best book I've written to date. I thought I actually was going to come out with it in 2023, but I've added so much material to it that I wanted a little more time. So we're going to extend that over to 2024. So there you have it. And I have the Elliott Wave techniques simplified as well. All right, so week ending. All right, so we ended the year. This is actually the end of the year results. This was from last Friday. So the Dow Jones finished the year at 13.7. Pretty good, actually. That's a decent year in the overall Dow. But the NASDAQ hit it out of the park at 43.4%. Unbelievable. And then the S&P 500 at 24.2%. Also a really good year there. And the Russell didn't do too bad either at 15.1. I kind of thought the Russell would be a little bit lower at the end of the year, but it actually rallied along with everything else towards the end of the year. So that is actually an excellent year in the markets. And of course, you know, we were predicting a sell-off in 2023. That did not happen. And the long-term sell-off really now has been pushed back until after we reach the next high in the markets, and we're not there yet either. So we'll talk about that when we get to the charts. All right, fear and greed for this week, going into the weekend anyway, was 76. So before the week before it was at 78, so about the same, okay? Usually when you get to an extreme greed area like we're in now, you're in some type of top. It could be a short-term top, moderate top, or even a significant top, depending on the wave sequence. This looks to me to be a moderate top. We're probably due for a pretty hefty correction in the markets, but not a change in trend, so to speak, in the markets. Just a profit-taking move since the bullish market has been underway since October. So it's due. It is definitely due. And every time we get, this is plotting fear and greed over the last year. Every time we get into the 70s, like right around here, you can see that eventually it's a topping area, and we usually have a move down. So this is fear and greed when it gets above 70. And you know, it can stay pegged at extreme greed for quite some time, but eventually it yields and comes back down. So I think we're probably pretty close to seeing that. We may be in the initial part of that right now, but it still has to come down a little further. All right, in terms of economic announcements, starting with Wednesday this week, we've got U.S. job openings, ISM manufacturing, auto sales. Thursday, we have ADP, initial jobless claims, S&P final. Friday, U.S. unemployment or employment report, the rate and the wages. and hourly wages too, factory orders, and there you have it. So we don't really get anything in terms of a Fed. We do have minutes of the Fed December minutes coming up, but interest rates aren't going to be announced until later this month. All right, when we look at charts, we're going to be using our trading system, all right, that covers pattern analysis, covers momentum, volume analysis. It also covers scanning the markets, and in addition to that, risk control. All right, so here is the projection of where I think the markets are going to end up sometime in 2024. So we've got a situation where we took out the old high here, back in this area here, and now that we've taken out that, this is a minor 4, 3, and we're on our way up to 5 right there. So that's kind of where we are in the sequence. Now, what concerns me here is this big run up we've had here that's gone on since the October timeframe. So that's a pretty impressive move up. So we're due for a little profit taking. I don't think we're going to get anything significant more than just a pullback and then more of a rally. So I think this dip may be an opportunity to buy in for some trades for the remaining part of the year until we get to this target zone. And we may actually see this type of movement. We may get a dip here, come up to the resistance level here of the fib extension, get another dip, and then into it. So I think that could be a possibility of what we see. So a lot of zigging and a lot of zagging, but initially getting into that target zone sometime in 2024. So we'll have probably a better idea of the timing once we have this profit-taking leg over. And let's see how extensive that is. Let's see how far down it comes and how quick the recovery is. Because what can happen is you can go into a profit-taking area, it can kind of waddle back and forth and then move. And of course, that can delay the timing. So I'm calling, I don't think we're going to get to that wave 5 target zone until probably the middle part of 2024 at best. It may even be the latter part before we get there. And what is that target zone? We're looking at around 40,000 up to about 47,000 as a possible high, and we're sitting at 37. So fairly significant, okay? So I think any long positions you have, you can probably hold on to those at this point. If by chance we get a failed wave 5, which means we don't reach the target zone and we get an incredible sell-off here, then when we go below this area, then we gotta start dumping long positions for sure, okay? So you wanna be careful if that happens, but we'll watch it and we'll let you know. You're not gonna miss that, okay? But it shouldn't go down there if this is going to be a normal wave 5. And if you have any questions on this, feel free to ask me right here in the chat area. Okay, so we've got a yellow PTF here, okay, which is indicating some type of top here, probably on this leg here. So everything to me points that we're set up for a pullback. And so kind of get ready for that. If you really want to take profits on this big move up, you can get out and try to get back in after the pullback. That's certainly something you may want to do because a lot of these trades you probably made good money in, especially if you got in early in October, right? So kind of cool. All right, so now with that said, all right, once we reach this target wave 5, okay, this is going to be a major top. So in this area here, when we start to see this being reached, we got to be careful here because that wave 5 is going to be a end of a wave 3 on the weekly chart. So to back up, before we took out this high here, okay, we were thinking that basically this was 5 already in, and this was the start of a long-term correction on the weekly chart. So this 5 on the daily was projected in the beginning as a weekly wave 3. So that's why the prediction was for a tremendous sell-off if that wave count held. Of course, unfortunately, you're never going to know until that high is taken out if this is a complex correction that will yield those lower lows or if the wave count has to be adjusted. But as soon as you break this high, then that's when you adjust the wave count. So this is now a 3 here, a 4 here, and a 5 here. Okay, so that's kind of where we're at now. You should not be short or you should not be long any inverse ETFs at this point. All inverse ETFs would have been stopped out if you would hold those for a long position here. Okay, you just get out. All right, you'll have a chance to go back in, all right, later, but don't hold them because we don't know how high up into wave 5 target zone we're going to go, right? So you gotta be kind of careful about that. So I would dump those, and we'll see if we want to go back into those later on in 2024 sometime. All right, so that's kind of where you're at now with those. All right, so that is the daily chart. The weekly chart shows how extended this move up that we've had since October. So here's the October time frame down here where this big move up came. And if we end today, all right, and we start coming down, this is the profit taking target zone I'm anticipating. And basically it's just a fib retracement. And it's looking at 36 down to about 35, and if it gets extended, maybe 34 is possible. But this is probably what is, we're kind of due for this at this point. We've got bearish divergence building here, which means that prices go up, but the momentum behind the prices goes down. So when you see that, that's called bearish divergence, and that also occurs at the mature part of a trend. Doesn't mean you can't make another high, but the highs are basically now going to be few and far between until we get this profit taking pullback. All right, so that's kind of where we're thinking. So again, 35,000 to about 36,000, that will probably pull back. So not too big a deal, but don't be surprised or caught off guard by it, okay? On the S&P, you know, we're reaching up there as well to new highs, so very similar situation. We're looking at about 5,114 on the S&P to about 6,111 as the target that would coincide for the markets as a whole. Okay, so that's kind of where I'm at there. And on the NASDAQ here, we're looking, I think, at probably a little bit higher highs here because of the fuel behind the technology sector. Like the Googles, the Amazons, and things like that. My target on this for right now is about 19 to 24, and we're at 15. So I see quite a bit of upside here. Now, the only thing we got to be careful about here on the NASDAQ is we have not taken out the high. And it's still possible that if this thing comes down to complete a correction here before going up. But my gut feeling is that with the Dow and the S&P so strong still and breaking highs, this thing's going to break highs too and go right into the target zone. So the thing you want to take away from this is that, all right, 2024 is going to be an interesting year. The market should be fairly strong, I'm thinking, until probably around the summer, okay? Maybe the spring, right around there. It's hard to precisely say. But I think you've got a fairly good market until then. And then we have to be careful because once we get into those target zones, now we're right back to where we were when we were predicting the big weekly long-term correction, right? So we're going to be right back then. So unfortunately, this didn't clean the market out. This just delayed the long-term correction. So it's looming out there sometime probably around the latter part of 2024 going now into 2025. And then once that big correction's over, then we'll have another big bull run after that. But that now is years off. So you still kind of, you know, be aware that 2024 could be a great first half and maybe a bad second half. So we'll have to see how that plays out. And I think too, we're going to take a look at silver. We're going to take a look at gold. Those markets traditionally should do pretty good during a time when the market starts to top and reverse, okay? But we'll see, all right? We'll certainly keep an eye on those as well. Certainly the cryptos are one to keep an eye on too. All right, we'll talk a little bit more about the housing market. So I think on the housing market here, what we want to keep an eye on here is we're still in a bubble, okay? The bubble is still extended here, okay? We had a big move up here, and then we had a big move here currently. So this was the 2008 financial crisis, and basically what we're looking at here is the Case-Shiller versus the CPI. So the Case-Shiller is in red, and the CPI is down here in black. I'll put CS for Case-Shiller. So anytime you see quite a separation between these two lines, you're getting into a situation where you have a bubble in the housing market. That's the general consensus. Now, if history is anything, usually when this happens, you get eventually a move back on housing, back closer to the CPI as it moves back into a norm or the mean. And so we saw this after the financial crisis, and then you have a recovery, all right? And then interest rates during COVID went to zero, people moved to the suburbs, and we got the big spike in housing, right? And now we're kind of hovering here, still extremely high, all right? So the bubble has not burst yet, even though, people will say some localities, it's, real estate's very local, so it could be dependent upon that. But also, too, you're seeing commercial probably hurting a little bit more than housing at this particular point. But it'll be interesting to see how this plays out. And I would imagine now that they're talking of lowering interest rates, I imagine housing will stay fairly strong until the market tops itself. So I'm thinking probably we're going to remain in these upper levels until we top the stock market. And we'll see how that affects. Because when the market breaks, you usually have layoffs and things like that, and people are kind of have to sell their home, forced to sell their home, so to speak. And if interest rates are lower, okay, that will increase the demand, but the prices probably will have to come down a little bit because people still can't afford it. When you talk about housing prices, they need to be affordable in certainly the first-time homebuyer markets, and they're not right now. So that's going to have to come down. Lower interest rates will help, but it's not the total solution. The prices have to come down in order for people to be able to afford them, and that has not happened yet. All right, and so that if we look at this here, let me just go to this here and open this up a little bit more here. So if we look at this chart here, you're looking at here home prices versus incomes. Home prices versus incomes. And so again, the chart basically tells the same story as the CPI versus the Case-Shiller, in that we're bubbled right now. Prices are so much higher than the income average here that they're really in an area where they're primed for pulling back to the mean. And so that's kind of where we are now. This chart comes from RE Venture Consulting. And they have some very interesting data there. But the home prices, according to this, basically at the end of 2023 was 31% overvalued compared to income levels. So I'm thinking the market's probably going to pull back quite a bit to come down to the affordability index. And so that's kind of what I think is going to happen also sometime in 2024, maybe the latter half. And if anybody wants to add on to that, feel free to do so. Okay, so that's kind of where we're at now. All right, so let's leave here for a moment. And here we are currently at the Dow. What we're starting to see this week as compared to last week, I'm just going to open up this chart here. And this is the 60-minute chart. So this is starting to show a little bit of toppiness here. It's a little too early to say, all right? You certainly could get one more high before we come down as well. This is getting awful close. The owl, which measures the momentum, is getting awful close here to going red. And of course, when it goes red, that could be signaling we're going down to the fib profit-taking zone. So that's kind of where we're thinking prices are going to go. So, we're taking out this little support here. All right, we got a pyramid sitting here still. So you haven't gone below that yet. If we go below that, then that probably would indicate we're heading on down to the profit-taking zone. So I think it's possible. We'll take a look at it next week and see what kind of continuation we have on here. But we could be getting or entering that profit-taking surge that I'm expecting to see, okay? And that's coming across pretty much all the markets. All right, I want to take a look at the cryptos real quick. You know, I've been bullish on the cryptos, and they're doing good too, but they are also in an area here, all right, where they're due for some profit taking. Again, they've had such a good run again since October, just like the rest of the market. All right, going back all the way to really 2023, and it really ended in the end of 2022 and started moving up. And then in October, after we had this big move down here, it started its move up dramatically. I find this very interesting that we had this one price bar that probably took a ton of people out of the market, because a lot of people would have had their stops here, all right? And so that was kind of an interesting situation. And it's almost looks like take you out before the thing takes off, right? So hopefully you were able to get back in. And so if you are, you want to stay with this, because basically I think this is going to eventually do quite well and get above probably the $60 mark. But it is due for a pullback, and that pullback should probably be around 30 to 25. And if that's the case, at that point, you may want to, if you're not in it yet, go ahead and think about getting into that. Of course, talk to your financial advisor first. All right, silver. We want to watch silver because silver has been oscillating back and forth, back and forth, back and forth, and it really has not broken out of this particular channel here. So, you know, you've got a kind of a high here now and even a low here, all right? And it came up close, if not broke it a little bit, but then it sold off and it's never come back. So let's see if it comes back and goes above there. So I would not go long silver here until we get a breakout. I don't see it, I just don't see it worthwhile getting into it and sitting there for a while. On the lower time frame here, which is the 60-minute, we've got a red PTF, but that's, you know, only indicating here we're going below yesterday's price bar for right now, okay? However, it might still stay red because of that. This now is green, indicating that once this movement down is over, we should pop back up and take this high out, which would be great. All right, and of course we broke out of a small pennant we had here. So I'm kind of thinking that silver should break back to the upside, but the wild card is we just don't want to get stuck in a sideways market waiting for that to happen. So I kind of would put the brakes on a little bit, wait for it to rejuvenate itself and move back to the upside. I do think silver will be good, but I don't think you have to rush into it. Gold, let's take a look at gold here. Gold has come up and reached a target here that we expected, short-term target, and now it's moving back down. Long-term, all right, we have more upside coming here. So this was back in, let me just grab it here. This was a 3 that occurred back in 2011, okay? Then we had a broad-based multi-year wave 4. And now we are on a wave 5, and we did exceed wave 3. We still have a green PTF, so we're not done, and we're still moving up on this. So probably around 220 is the target for that. However, I think probably on this, it won't be a straight shot up. It'll be a little bit of a pullback. We're in that one pullback right now. So, if you're in it, hold it. Just don't have your stop so close that you can't survive any type of pullback like we're in now, okay? So your stop should probably be around here, 180, okay? You could probably maybe get away with it around 183, somewhere around in there. All right, that's possible. All right, so that's gold. Going back to cryptos, Coinbase. All right, similar type of thing here, okay? Again, this thing went up a little further, but now pulling back into its target zone, profit-taking target zone. And that's what I would expect for most of the overall market. I think we're going to have a little pullback here into that. Now, with that said, all right, as this move down subsides and we see bullishness coming back in and we no longer have red here, that probably would be a good buy at that point. All right, now the next thing to look at here is the blockchain rather, and on this one here we're seeing the pullback too. So not surprising. I mean, after you've had a nice little run like we've had, not surprising to get a pullback at this point. So just wait for the pullback to subside. Don't have your stop so close, but at the same time, I'm expecting highs on this one above $80. So I would be a long-term holder in this. And in order to survive any of these profit-taking pullbacks, you want to be sure that your stop is not ratcheted too close to the activity. All right. Now, UNG is another one I want to take a look at today. And this is the natural gas ETF. We saw some movement to the upside here, but we still have on some of our indicators calling for more lows on UNG. All right, so we got down to about $4.50, but the PTF on the daily time frame is red. So we're kind of in the profit-taking pullback zone for all those that are short to possibly cover. But again, we're thinking more lows are coming. We've got a pyramid here active and a pyramid here active on those time frames there. And of course, you can see the bullishness on the 60-minute chart as we're into the target zone. And we may keep going back up. It's too early to tell right now. But also we got the PTF going almost green on the 60-minute, which would indicate that the bullish profit-taking move is not over yet on UNG. And when I say that, it doesn't mean bullish in terms of, jump in and go long. It just means a lot of the shorts are covering. Some people may think there's a bottom and go in, and when they see that bullishness come up, it sucks them in. But they got to be careful that this isn't just a counter trend move in a downtrend, which is what we think it is yet. So I don't think that's quite ready yet. Now, USO is another one I want to look at, and this one here has come down quite a bit, but it has not taken out the bottom back in the spring of 2023. And so that's kind of important. So we had a pretty good leg up. Now we've had the pullback, and the pullback's been pretty low, okay? All right, so that's kind of been pretty extensive. So we're kind of waiting to see if we get any type of movement off and make sure that bottom holds. And so far, we really haven't gotten it. So again, if you're long on this and your stop is at the bottom here, I would just hold it. But if you're thinking about going in, I would not go in on that, okay, right now. And if you traded this leg up here, you would have been stopped out here on the pyramids, okay, that type of thing. All right, so that's kind of where we are in the markets. So to summarize here, because we're coming close to the end here, to summarize, basically the first half of 2024 to me looks like it's going to be pretty good in the market and in the housing market in terms of price. I think they're going to stay elevated. The second half of 2024 right now could be a little bit of a wild card. But it looks to me like we should, if we reach those target levels, start to see some selling coming in, and it may be significant at that point. All right, so we'll kind of pay attention to it. I think the things like cryptos, I think will do well even in a bad stock market. Gold should do fairly well, and I think silver probably will do fairly well too. So those are not bad places for a little bit, trickle a little money maybe into there at certain points in the middle part of 2024. But we'll keep you advised on that, okay? All right, so let me do one stock here. I know I haven't answered too many questions, so let me get to those in just a minute. Let's see what we got here. Okay, so on IWM, Frank, I don't know if you're long or short. Hopefully you're long because we think eventually This will get up to 292 to 374. All right, on that. So this too will pull back a little bit. You're seeing it now, profit taking. So don't be surprised if we get a little bit more of a pullback before it should continue to go back up. And so probably you're looking at a pullback anywhere to 190 to 181 in that range there, okay? And if you're short on this one for the pullback, you should probably do okay if that profit taking leg gets into the target zone, okay? So 190, okay, look for that, okay? Also too, we've got a PTF, Frank, that may help you when this goes red, okay? If that goes red, then you want to keep your short, and when it goes back to yellow, go ahead and cover some of your shorts, okay? That type of thing. All right, so let's see. Jeff, I did get your email on wealth charts. We have a lot of history with wealth charts. We tried to program, we gave them our software code and had them look into it, but apparently they dropped the ball and couldn't program it. So not sure exactly what happened with that, but they kind of stalled on that and then basically couldn't do it. Okay, so that's why we are not on that platform at this point. We were hoping to be, but it just never worked out. All right, so Perry saying, I read Harry Dent predicting a major drop in the markets this year, biggest in a lifetime. What is that, 3 years? Well, the Harry, unfortunately, Harry goes all in, right? You know, in terms of, he should really, you know, here I am telling Harry what to do, right? He's been in the business probably longer than I have. But the funny thing is that, you know, you just don't tell people to go short unless there's a technical reason for it. That's the way I look at it. Now, he deals a lot with demographics and things like that. And the markets are not always logical. And so, yes, they're due for a sell-off. Yes, they should have sold off in 2022. Couldn't agree more, but they didn't, did they? So you always follow the trend. And the trend's your friend. And when things change, you change along with the trend. Okay? So that's kind of the deal with that. But I think eventually he'll be right. But I think probably we'll have to see how the latter half of 2024 unfolds. We'll have to see. But yeah, blind squirrel finds a nut. Yes, eventually, right? But I don't think he's telling everybody. I think right now, and I may be wrong on this. Go see what he says yourself. But I think he is indicating people should be liquidating some of their stocks in anticipation of the bear market. But quite honestly, I wouldn't do that until we see actual signs of the bearish market. Okay? But yeah, kind of interesting. All right, what else we got here cooking? Anybody else?
Al has to have something.
What's that?
We got to have some picks from Al.
Well, we got to go. It's 10:04.
Yes, indeed.
And I have client support, so I really can't do any more picks. But, you know, that's what Stock Analysis Friday is for. So please come to that. We do have the client support coming up in 25 minutes. So please attend that. If you have any questions on using the software, I usually try to cover some trading topic during those, so everybody is invited to that as well if you are one of our clients. Okay, so that's it. All right, so have a good first week of the new year, and we'll see you back here next week. And thank you for attending today, and I hope everybody's doing fine out there. And let's make 2024 our best year yet. All right, so Gene, I'm going to turn it back over to you, and guys, I'll see you next week.
All right. Well, great session. And yes, 2024, it's going to be an awesome year.